The borrow till you die strategy that the IRS does not want you to know about. The wealthy use a very strategic way to never pay taxes. They have creative ways that they have found in the tax code. They have found what assets to buy, and they have found what to do with them so that they never pay taxes. There is a definite and clear distinction between the owner and the worker mentality that I'm going to break down for you, and why the tax code is designed for the owner and how you can participate, because it is nowhere near as difficult as you think. But I'm going to break this all down for you. It is super simple, and you are going to love this. Let's go.
Noel. Yeah, she can fix that. You gotta get it done, or you need to do it better. Well, she can fix that. Yeah, she can fix that. Investment to get back, trying to get a big stack. She can fix that. Let's fix that.
So let's get right into this. Noel Randall is a real estate multimillionaire. I love real estate and I love short-term rentals. If you want to get involved in short-term rentals, I have an entire course where I teach you how to own and manage your own short-term rentals so you can participate in some of the biggest tax deductions that exist. Get that course at bnbriches.com. There's a link in the description box. You can use code YouTube to save 50%. So within the United States tax code, there are some real advantages, but you have to realize that there is a tax code for owners and there are a tax code for workers. And for most of us, for many years, we have fallen into the worker category. I have gotten out. I used to work a full-time job and now I am a full-time entrepreneur. So I know what it's like to work a job and have your taxes, your income tax through a W-2. And most of the taxes that are actually paid in the United States are paid by W-2 employees. Obviously, it comes directly out of your check. However, owners and entrepreneurs, they play by a completely different rule book and they have a completely different tax code that they abide by. So let's break that down for a second, because as a worker, you are pretty much paying your taxes and you are paying the maximum amount of taxes because, of course, like I said, your income is taxable through your W-2 and it gets paid directly by your employer. So if, for example, you make $100,000 per year, you're going to have a tax bill of between $18,000 and $22,000. Well, I'm going to show you by the end of this, even if you are a salaried W-2 employee, how you could be paying 0% taxes. Let me break down this owner part for you. Once you step into the owner category and you start paying taxes as an owner, this is how you can actually get rich and stay rich forever. Once you get an asset, the rich actually don't sell their assets. They keep them and they borrow against them. Let me explain. If, for example, let's just start off really small. Let's just say you had a house and it was a $400,000 house. Well, on that house, you would have what's called appreciation. That home is going to go up in value over time. So in maybe just a few years, 3 years, 5 years, that $400,000 house is now going to be worth $500,000. Well, many people with the worker mentality will go ahead and sell that asset and cash out and get that $100,000. Cha-ching, they would be happy. Wow, I had this property and now I was making a little bit of cash flow because I use it as a rental property. Maybe I made some cash flow, about $300 per month. And now I have sold that asset and I have $100,000 cash. That is a very basic and worker mentality, to just sell the assets. The rich are going to keep that asset. Let me explain why. In the IRS tax code, there is something called depreciation. And depreciation actually acts as if the property is going down in value over time, as if there is some wear and tear on the house and it has less value. So you get to actually write that off. But like I said, the home is actually appreciating in value because it's real estate. And over time, it is most likely going to go up in value over time. So you have the IRS awarding you with depreciation that's not really real. You get to write that off and you got to actually offset some of your taxes that you are owed, but instead the property is going up in value over time. Well, the worker mentality is going to sell that asset when it goes up and cash that out. Whereas the owner mentality, the rich mentality, is going to keep that asset and borrow against it. Let me explain how you do that. In the same example, when you had a $400,000 house, say you kept it for a few years. Well, obviously it's a $400,000 house. You would have put down, let's just say you put down 20% and you put down $80,000. So you had a $320,000 mortgage. Well, over time, you had a tenant in there and they were paying down that mortgage, right? So let's just say in 3 to 5 years, instead of owing $320,000, you owe about $280,000. Like I said, the worker is going to sell the asset and they're going to end up with a taxable event. They're actually going to have to pay capital gains taxes. When they're not just going to get that $100,000 that I mentioned, they're actually going to lose $15,000 to $20,000 right off the tops because of capital gains tax. But when you borrow against this, okay, the lender most likely, let's just say, using the same example, the house is now worth $500,000. And the example that I gave, you owe $280,000. Well, almost any lender will lend you about 80% of the value of the home's value right off the top. Just because the home is a home, you have collateral, you could easily get a loan, or better yet, a HELOC that will let you borrow up to 80% of the home's value, which was $500,000. 80% of that is $400,000. I mentioned that you owe $280,000. So that would be $120,000 that you could access. So instead of actually selling the home and taking that cash and then paying capital gains tax where you lose $15,000 or $20,000 more, you could just actually take a HELOC and now have $120,000 that you can now buy more assets for, and you did not have to pay any taxes on. Remember, when you sell the asset, that is income, and you have to pay capital gains taxes. Rich people know this, and they are not interested in paying any taxes. Remember, selling an asset creates a taxable event. However, borrowing against your asset is leverage. And now you have the cash. You're able to pull out that cash, and now you can actually get more assets and keep repeating this process over and over and over again without having to pay any taxes on any of the borrowed money, because again, it's borrowed money, it's not income. So now you are in this amazing situation, and hopefully light bulbs are going off for you on how you can do this over and over, even just with one rental property. In fact, it's one rental property that just opens up the door for all of this. Real estate will actually create an opportunity for you to become wealthy. You could do this with any of your assets. Like, for example, you could do this with a business. And many owners of businesses do this by paying themselves just $1 per year, like Elon Musk and Jeff Bezos. But then what do? They get company stock, preferred stock, and they borrow against that stock. That way they don't have any taxes that they have to pay. And that's just money that they have, and they can reinvest it over and over and over again. So you can do this with a business, you can do this with stocks, or you can do this with real estate, which is the easiest way for most people to gain entry into this wealth system. And this is an easy way for you to start building that wealth and never paying taxes on it. Now we have an even bigger opportunity that did not exist before via the One Big Beautiful Bill. Let me explain. The One Big Beautiful Bill supercharged depreciation. I started off telling you that in the tax code, one of the reasons why the rich, the wealthy, why we absolutely love real estate is because we can easily leverage the equity. Again, we can borrow against the equity and never have to pay taxes. No capital gains taxes, no income taxes. But then now with the One Big Beautiful Bill and the bonus depreciation, you can take this to the next level, even if you still work a job. Let me explain that. So let's go back to the beginning where I said you were just a worker and you made $100,000 per year. Well, I mentioned that you're going to have to pay $18,000 to $22,000 on average in taxes. So instead of you actually having $100,000, you already know you definitely do not have $100,000 because you had to pay taxes on your income. Well, with bonus depreciation, you actually could take a deduction of up to $125,000 on just one property in the first year. So that would mean you would actually owe zero taxes because, again, you could actually have more write-offs through the depreciation than you actually even had in taxable income that you owed. So this is a way for someone that has a job, especially someone that makes a good a salary, like maybe $100,000 a year, why they always buy real estate, because they know this is the entry point into getting an asset and being able to not pay any taxes and grow your wealth and do this over and over and over again. and reduce the taxable income that you had, even if you are working a job where you are getting a W-2 and they're just stripping the taxes directly from your paycheck each month. This is the cheat code. And the one big, beautiful bill with the bonus depreciation takes that to the next level. And this is an opportunity that did not exist before, that exists right now, that more and more people should be taking advantage of. Let me keep going. In the tax code, you actually can turn your short-term rental into an actual active business. And if you actually manage your own short-term rentals the way that Noelle Randall does with my Airbnbs, you can take your income and you can take your tax liability all the way down to zero and beyond, because you can actually even take the excess depreciation and roll that over into the next year. Now, Noelle Randall is not a tax attorney or a licensed tax professional, but you reach out to yours so that you can get the exact information for yourself. However, I am telling you, with short-term rentals, that is the better of the two, because with long-term rentals, yes, you have depreciation, but with short-term rentals that you manage, okay, you actually get to turn that into a business, an active business. You actually are the person that's checking in the guests and, changing out the sheets. You have to have a cleaning team. So it is actually viewed as an active business. So it's real estate and business combined together. And so this creates a situation where you would actually owe no taxes at all in many cases, because of that bonus depreciation and all of the write-offs that you could do, especially in that first year of owning the property. And then with the leverage, you could easily take that and get more rental properties, especially more short-term rental properties. And as I have mentioned, Noelle Randall is a real estate multimillionaire. I know that you will make 3 times the amount of income on a short-term rental than you will with a long-term tenant, generally speaking. Because you are renting the property out on a nightly basis, not on a long-term lease, you actually can charge more, especially during different times of the year. You can charge for extra guests. You can charge for extra early check-ins and late checkouts, different things like that. There are lots of ways to make even more money with a short-term rental than you ever could with a long-term rental. And now with the new tax code and the one big beautiful bill, short-term rentals are seen as an active business if you manage them yourself. So you could actually work a W-2 job, manage your one rental property. Again, I always suggest you have more than one, but obviously you have to start somewhere. So you may start with your one short-term rental and turn that into a situation where you have no taxable income. You have 3 times the amount of income than you would on a long-term rental. And you now have offset all of the taxes that you would owe at your job. They are now money coming back to you, or tax deductions for this current year and future years, especially if your bonus depreciation exceeds what your taxable amount is. You can actually roll those over. You don't have to depreciate the asset over the 39 years. You actually can take a lot of the depreciation in the first few years and really create a situation where you can gain a lot of wealth really, really quickly and not pay any taxes. Let me keep going. So to recap, so you completely understand all of what's possible for you, let me break this down for you. Cash flow grows your equity. Equity unlocks borrowing tax-free. Then you will borrow. Borrowed capital buys more assets. Then you have more assets. So assets create more deductions. And now this is all supercharged by bonus depreciation. More deductions eliminates taxes. The eliminated taxes mean more deployable capital, meaning more money that you can use to buy even more assets. And then more capital means acquiring even more assets. Do you see how the rich get richer? Do you see this whole big circle and how this works? This is what you need to do. And you can start with just one property. And again, one short-term rental property to really take this to the next level. I believe that short-term rentals are the greatest tax strategy of all time. And I truly participate and I love it. You can learn about how to have your own short-term rentals, your own Airbnbs, just by getting my course, B&B Riches. Go to bnbriches.com and buy my course and learn how to start your own rental business, how to take advantage of all of these tax codes, and how you could do this even while while working a full-time job. You literally can even start by managing other people's property, getting that cash flow, and then buying your own short-term rental property. You can do this. You don't want to stop at one property because, again, the tax code is designed for you to get more and more properties and never pay taxes. And this is how the rich get richer. It is time for you to change your financial status and get in the game. Get this course. You can get 50% off by using code YouTube. Go to bnbriches.com. Get this course. You can take it at your own pace. Use code YouTube and you can have your own short-term rental business in a matter of weeks. I was able to do it. I learned most of this from an 18-year-old kid, and I've been able to do this year after year after year, and you can too. You do not want to be paying taxes. You want to grow your wealth, and you can do it with short-term rentals. Go to bnbriches.com right now and use code YouTube. Why? Because I want to make sure that you have all of the knowledge, all of the tools, and all of the resources that you need to be successful. This is Noelle Randall. To your success.